So I've spoken with over 2,000 individual investors, and I always ask this question: what's more important to you, cash flow or appreciation? Cash flow being money you're getting each month or each quarter during the life of a deal, or a lot of money on the back end through appreciation, right? Those are two separate things. And I think the answer is it really depends on what's important to you. I've become much more of a cash flow guy. I'm going to share why. Even when I first started thinking about this years ago, and I'm going to share why that is. But it's really important that you have a plan, you know what you're doing, where you're headed. So let's jump in and get into this. All right, so a quick disclaimer, I'm not your investment advisor. My name is Bronson Hill. I'm the CEO of Bronson Equity. We've got over $200 million in multifamily assets, some other things such as oil and gas, car washes, other types of investments. And this is just educational, so get your own investment advice. So cash flow, I'm gonna jump into this. Most deals are kind of a mix of both or one or the other. So cash flow is important, or should be important to you, if A, you wanna retire, or B, you wanna live off of the cash flow being produced from the deal, which is kind of a way of living off of it, right? And so they're kind of the same thing. Appreciation is important if you more value long-term wealth. Maybe it's in a retirement account. You don't really care when you get paid, and you're looking for higher long-term total returns. You've got some deals like this that really don't cash flow for a while, but they have a lot of back-end growth. Sometimes for some deals, it could be 4 times, 5 times, 10 times, 100 times potential growth. And so there's a trade-off there, right? So for a cash flow deal, one example of this is the ATM machine fund that we've done for a number of years. And what it offers is a monthly cash flow. It doesn't offer any appreciation, really. There's no other upside. It actually depreciates completely to zero, but it offers cash flow every month and every quarter, which is great, right? Just consistent monthly cash flow. The other side of this is if you were to buy a single family house, not a big single family house. I've had some single family houses, but the issue is they didn't cash flow. But buying a single family house in Los Angeles, right? Somebody say, well, why would you do that? But if you buy a house, you see a house here, it doesn't appreciate, it'll appreciate, but it won't cash flow maybe. Maybe it's negative cash flow, right? But you're hoping for a long-term appreciation. So other deals like that, different types of things that are out there. So, and then other deals, just as this one behind me, a mix of cash flow and appreciation, right? Where you're getting maybe a 7% or 8% kind of as you go cash flow, some cash flow from the rents or cash flow from other things, and then you hope that the property will appreciate over time, so when you sell it, you'll actually get more money than what you put in because of the appreciation over time, which is great. So the question really, the big question here is, which is better, cash flow versus appreciation? So if I had like a crowd on one side, and I'd love to know in the comments which you're passionate about, whether cash flow or appreciation. But in general, I have come to believe that cash flow is king. It's really the number one thing. The reason why is it allowed me to quit my job. It allowed me to replace my living expenses. It allowed me to replace my income through investing, right? A lot of money someday is great, but it doesn't actually give you the life of freedom that you want. A lot of what we really want is freedom from a job, freedom to be able to fire ourselves, right? I wrote a book called Fire Yourself, Replacing Your Working Income with Passive Income in 3 years or less. And the only way to do that, in my opinion, really is through cash flow. The people that really don't care about cash flow are people that are, if you have a net worth of 5 or 10 million or more, cash flow is less important because you have enough to kind of figure out things along the way where you're not going to be hurt if you don't have cash flow coming in. If you're somebody who's working a job and you have maybe less than $1 million saved up, having some cash flow can be really, really helpful for you. So appreciation, like I said, can work in more speculative deals. There's things like venture capital, startups, crypto, stocks, hedge funds, all different types of stuff like that. It can make more sense because it has higher upside. So that's why some wealthy people really love higher appreciation deals, because it doesn't matter if you get paid now or paid later. I also feel like cash flow, there's a benefit that it actually reduces your basis or reduces your risk in the deal as you get paid back. So if you have a deal that pays you every single month and it just keeps paying you, it's reducing the amount you have invested in that deal, right? So that's another thing that I like about cash flow deals. And then, this is what Robert Kiyosaki, I have a couple quotes from him here. He says, make your own decision based on your stage of life and risk tolerance, right? So that's the thing. You have to really choose what it is that makes sense for you. He also says this, he says, I'm a cash flow guy. If it doesn't cash flow, I'm out, right? So he's a guy who's very wealthy, but he says, hey, I'm a cash flow guy. If it doesn't cash flow, then it's out. And of course, he's got his board game I have on the shelf behind me, which is Cash Flow 101. So anyway, I hope you enjoyed this. If you're not familiar with multifamily investing, multifamily is a great way to get started in alternative asset investing. It's very understandable for a lot of people. I have this multifamily 101 video. You can check it out here, just some of the basics of multifamily investing or getting started in it. Check that out. And then, if you haven't read my book, it's called Fire Yourself. You can see a link below. I do have a copy here on the shelf, which is right here. And it's how to replace your working income with passive income in 3 years or less. So I encourage you to check that out. And we'll look forward to seeing you on the next video. I hope you enjoyed this. We'd love to see in the comments whether you are strongly for cash flow or strongly for appreciation. Let me know.